Good afternoon, everyone, and welcome to PBA at Noon. I'm Paul Benwell, and I'm joined by my colleague, Sophie Caesar. Today, we have with us Unigold, UGD on the Venture Exchange, a Canadian-based growth-oriented junior natural resource company focused on exploring and developing its gold projects in the Dominican Republic, a country highly prospective for gold and polymetallic mineralization. The 21,000 hectare Nita concession is the largest single project within the 75-kilometer wide Cretaceous age Tirio Formation volcanic sedimentary rocks, known for hosting major gold, copper, silver deposits. Unigold has over 20 prospective targets within the concession and is concentrating its activities on the Candelones deposits. Here with us to tell us more is the CEO, Joe Hamilton. Hi, Joe. Welcome to PBA at Noon. And whenever you're ready, you can start, and we'll have some questions for you at the end.
Well, thank you, Paul, and thank you for the introduction. You know, as geologists, we just love to put long words in it and link them together to make it tough to pronounce them all. But
I can say mayonnaise, but I can't spell it. So there you go.
There we are. Well, what I'll do is I'll just share my screen and bring up our presentation. This presentation is available on our website. It's fairly lengthy. I'm going to stick to sort of the first 12 to 14 slides in it, but there's much more information available on our website for people, including our technical reports, including bios for management and the board. You know, all of our financial reports are there, and all of our press releases are there as well. So you can certainly download this presentation from our website if you want more information. Once again, I will be making some forward-looking statements. In effect, what I'm telling you is how, as we know it today, but things can change in the future with more information. And during exploration, it's fairly dynamic. That information comes to light on a regular basis. To show you our capital structure, we currently have about 126 million shares outstanding. Our market cap today is about $45 million Canadian. We do have a large number of warrants. About 20 million warrants are outstanding. They were associated with an equity issue that we did last June. Those were 2-year warrants, so they expire next year. They've got about 18 months left on them. If those were exercised, they bring in about $6 million Canadian. They're in the money now. Most of them are at 30 cents. Fully diluted, we have about 160 million shares outstanding. Eric Sprott is our largest shareholder. He owns this personally. He owns about 17% of the outstanding shares and about 19.9% of the partially diluted shares if he was to exercise his warrants. And then officers and directors own about 5% of the company. For those of you who are not familiar with Unigold, we are in the Dominican Republic, as Paul pointed out. Our concession is shown on this map. It's on the west side of the Dominican Republic, close to the border with Haiti. It's actually on the border with Haiti. But it occupies a section which is in the mountain range, which runs from the northwest to the southeast through the island of Hispaniola. That mountain range is an old volcanic island arc, so a series of volcanoes, similar to Japan today or parts of New Zealand. So that's the most prospective ground for gold and silver mineralization and copper and zinc in the Dominican Republic. Under the star that you see here is Pueblo Viejo. Pueblo Viejo is a mine that's operated by Barrick and Newmont. It's 60% Barrick, 40% Newmont. It is about a 1 million ounce a year producer. It's regularly listed in the top 10 gold mines in the world. I think currently it's number 3 in terms of production. It's certainly in the top 3 gold mines that Barrick operates globally. It's a tier 1 asset for them. So a very profitable operation. There's also a nickel laterite mine and a small copper gold mine in that same area. For those of you not familiar with the Dominican Republic, it's the largest economy in the Caribbean and Central America. It's a diversified economy with everything from agriculture to manufactured items. Raw materials are shipped out of the Dominican Republic as well. It's got a good banking system that's integrated with the North American banking system. It's got independent courts. It's had a peaceful transition of power for the last 50 or 60 years, and regular elections every 4 years. So it's a great place to do work, good infrastructure, good road network, good power network. So certainly a wonderful spot to do work. The Nieta concession itself, this map shows the concession. It's about 21,000 hectares, or about 20 kilometers by 10 kilometers in size. Each of these stars that you see is a drill-ready target. To the southwest part of the concession, these are acid volcanics, which effectively mean that these are good targets for gold. And up to the northeast, this is more of a basaltic terrain. These are copper targets that you see up to the north. We've spent all of our time at these three stars in the lower left corner of the concession, the Candelones area. And there's a main gold trend that extends into Haiti. Newmont did work in Haiti just across the border. So this is a real gold trend that extends up and through our concession. To give you an idea of the type of work we've done at Candelones, this is sort of a close-up. There's an oxide portion of the deposit that's at surface. There's a sulfide pit, which we engineered in 2013, and we're taking another look at this. There is lower grade mineralization inside the pit. And then we found higher grade mineralization in 2015 that is surrounded by this lower grade mineralization. We've got no drilling off to the east, although we did put some holes in there in February, late January, early February. We should have those holes out in the market in the next couple of weeks. And then we had limited drilling in between the two, but we also are starting to put some drill holes in there, and we're expanding the sulfide portion. So there are two projects here. There's the oxide, and then there's the larger win is the sulfides. To give you an idea of what our current resource estimate looks like, this is one that we put out in August in order to move the oxide portion into measured and indicated and inferred in order to complete a pre-feasibility study on the oxide portion of the deposit. But the larger sulfides, they have about 2 million ounces in the sulfide portion of the deposit. It's currently sitting at about 1.6 grams of gold per ton. But this drilling, this resource estimate was actually from 2013. It was restated in 2020. There's about 35,000 meters of drilling that's not included in this estimate. We're putting together a new estimate now. It should be out in the next 2 or 3 weeks, which will include all of that drilling. And that drilling focused on much higher grade material. So I expect to see this grade go up substantially, as well as the tons and the contained ounces in the next resource estimate. So once again, we've got an oxide project, which we're engineering through a preliminary feasibility study at this point. And then we've got a larger sulfide project, which we continue to drill and continue to expand. The oxide portion of the deposit, we're engineering it to be a heap leach. This is relatively easy construction, should be relatively low capital. We're guiding towards about a $30 million capital for this project. There's a 92,000 ounces measured and indicated, 38,000 ounces in inferred. Most of these inferred are sort of in-pit inferred, so they'll most likely be stacked on the heap. It's about a 4-year project. We're looking to produce about 25 to 30,000 ounces of gold per year out of this. Once again, very fast leach kinetics in our column tests. We can get about 80 to 85% recovery in about 3 or 4 days from this oxide material. It's not like the oxides that we would find in Nevada, which are chemical oxides. These are superficial weathering oxides in a tropical weathering terrain, so they leach very quickly. This project has a low environmental footprint. It's got a low strip ratio. There won't be any waste piles at the end, no post-production tailings ponds. And this project does 3 things for us. Although it's a short life project, what it does for us is it allows us to submit an application for a mining license. The mining licenses are currently granted for 75 years, which gives us good tenure over the ground. But in addition, it allows us to train a workforce in the local area, as well as to set up our logistics and supply lines before going into the larger sulfide project, which will be down the road a number of years. The sulfide target itself, as I said, is about 1.5 million ounces within a pit optimized. We're going through that exercise again, so I expect these numbers will increase on the next 3 or 4 weeks when the new resource estimate comes out, because we've got 30,000 meters of new drilling to incorporate into that sulfide resource estimate. Our metallurgy is good on the higher grade material. And once again, there's the resource estimate. But to give you an idea of what this looks like, this is a long section looking north. The low grade material is in the light stippled. The high grade material is in the red blobs that are here. And to show you what this looks like, this is our drilling, the pit outline. The low grade material is the lighter colored blocks that are here, and the red is the higher grade material that we've been drilling since 2015. I'll just remove the drilling to give you a little bit better idea, remove the pit, remove the low grade material to leave the high grade blobs that we have found over time, and then just put it all back together so you can see what it looks like again. Gives you a little bit of an idea of what we have been drilling, but some of the higher grade hits that we've got since 2015 are quite spectacular. We've got 30 meters at 9 grams in target A, which is the easternmost target. Target B is sort of the central target. Target C is this target. So A, B, and C as you move from east to west. So target A, 30 meters at 9 grams. I would encourage you to go to our website and look at the press releases that we put out. On some of these larger intercepts, we will publish the meter by meter assays. For instance, in this 30 meter intercept at 9 grams, every assay in that interval ran between 4 grams and 17 grams. So there's no super high grade that we're smearing out. These is consistent mineralization over the entire length of core. It's like that for every one of these intercepts. Target B is a little bit different than target A. There seems to be a little bit more silver and a little bit of zinc creeping in to target B. Target C is our highest grade target. It generally runs about 10 grams of gold per ton over about 10 meters, but substantially more silver and zinc in target C. And I think that's just showing that there's a bit of a grading going on. So to give you the price catalyst for this year, in the first quarter or early in the second quarter, we expect to have the PFS numbers out. Micon International is working on that now, and we look to be on track for getting that out in early April as far as the operating and capital cost numbers for the oxide resource. And then we'll submit an application for the mining license in the second quarter, and throughout the rest of this year, we'll complete the bankable feasibility study, which includes the full EIA. And then we hope to assemble final permits by the end of the year for the oxide resource, such that we can start construction next year and hopefully be in production and producing gold by 2023. As far as the sulfide resource, we'll put out a new resource estimate in the next 2 or 3 weeks. I think that will certainly underpin our current market cap, but we will continue with the sulfide resource. We've got 4 drills operating in country now. We will complete the phase 2 metallurgy and finalize a process design. And then in the second quarter, once we get the resource estimate out, we'll look at trade-off studies between an open pit and an underground operation here. Try to figure out, what is the best way to attack it, which has the best rate of return and capital efficiency. So we should be able to announce that in the second quarter, and we'll continue exploration on the sulfides. They continue to expand to the east with some of our drilling, and they certainly expand to depth as well. Some of our highest grade hits have been our deepest hits on these. So we'll continue to try to pull those to depth as well. We will explore some regional targets this year. That's sort of very exciting. I call those lottery tickets for shareholders. So we will move out and look at some of the regional things. There is more information on our website about some of our regional targets. And of course, we'll keep our CSR programs going because it's important to get community buy-in as you move towards mining. I don't think there's a mine on the planet that can go into production these days without having some community buy-in. So maybe at that, I'll just leave it there. As I said, there is more information on our website, specifically, about regional exploration, some of the work we've done in the past and what we're planning on doing in the future, as well as some of the bios, and they are all in this presentation. So maybe with that, I will turn it back to Paul and Sophie, and I'm happy to answer any questions that people may have. You can certainly type them into the chat box, and I think Sophie will pass them on to me.
Sophie, you're muted.
Technology. Can we hear me now?
Yes, we can.
Okay, perfect. Yeah. So there are quite a few questions here, but let's get started with this one. So You did discuss, about elections in the Dominican, but how stable is the government?
The government's very stable. The elections are very similar to U.S. elections in that they're held every 4 years, and a president can only sit for a maximum of 2 terms before they must move on. There's been a peaceful transition of power since the 50s in the Dominican Republic. So it's a very stable, from a political standpoint, a very stable country. From an economic standpoint as well, they've never seen hyperinflation. They do use the Dominican peso, which is fungible with every other currency on the planet. It's quite a stable place to operate, and I think that's primarily because it's got a diversified economy. And as I said, it is the largest economy with the largest middle class in the Caribbean or in Central America. So from that perspective, it's quite a stable country.
Great. And again, you did touch on it, but what about the community buy-in in terms of, I guess this person's asking, the land, the water? Are there any environmental issues that the community has raised?
Yeah, I see Terry, Mr. Ortzlin has put that into the chat room. Thank you, Terry, for the question. It's been a while since I've talked to Terry, but in any case, the community buy-in is very important, and we've been working with the community for over 20 years in the Dominican Republic. We started exploration in 2002, and this part of the Dominican Republic is not a well-populated area. There's just a few small communities. The largest is, in the immediate area, is a town called Restauración, which has a population of about 4,000 people. So that community, we're the largest employer in the area, and we have very good community relations. We did surveys last year as part of our CSR program to try to understand community concerns and concerns that would be there if we were to start an operation. The biggest concern that came back was water quality, as you could expect with any mining operation, I think anywhere in the world. But there was about 80 to 85% community support for putting a mine in and providing jobs and opportunities in the area. But the biggest concern was water quality. So we took that concern into our engineering for the PFS program, and we're engineering what we hope will be a very small discharge project. Certainly with a heap leach, there's no tailings ponds, afterwards to reclaim. It's simply the heap to reclaim. So we're taking those concerns in, and we're communicating actively with the community. So we have good community support at this time, but it's generally the local communities in depressed areas are usually supportive of mining projects. It's usually at the national level or at the urban level where you get a lot of resistance for mining projects, even though those people don't actually live in the immediate area of the mine. But everyone's entitled to an opinion, and it's our job to ensure that we have sufficient information and sufficient science behind what we're doing to allow the government to give us those permits.
Okay, excellent. So here's another one. What are the metallurgical recoveries, and what is the operating cost for an open pit resource?
For the open pit resource, now this is the sulfides. I don't know what the operating cost estimate would be for the sulfides. We haven't done that at this point. We did phase 1 metallurgy, which we released, I think the press release would have been May last year. The phase 1 metallurgy shows that for the high-grade material, the +3 gram material, we can get about 85 to 90% recovery using a gravity float leach circuit. Now that material, the high-grade material, is epithermal material that overprints. And maybe what I'll do is I'll just go back to this slide because it's a little bit easier to talk about it. If I take this off and I take the low-grade material here, runs about between 1 and 2 grams. So the lighter colored blocks that you see here in the block model runs about 1 to 2 grams. This material, we can get about 50% recovery through a standard leach circuit. It's partially refractory. It's the same mineral. If there are metallurgists or mineralogists that are in the audience, it's calaverite, which is the same mineral at Pueblo Viejo. And in order to get 97% recovery at Pueblo Viejo, they put this through an autoclave, but it will partially leach about 50%. The red areas, which is the high-grade material, is different. It overprints. It's much later mineralization. It's coarser grained. It has much more free gold in it. In some of the samples we've run through metallurgy, we can get up to 50% recovery through a gravity circuit. Then we float a sulfide con and then leach the sulfide con. And from this material, which is much coarser grain and different mineralogically than the low-grade material, we can get about 85 to 90% recovery from that material. So what we're looking at for this is, as I said, in the second quarter, we'll do trade-off studies between mining this by open pit. And I suspect that the next resource estimate we put out in a few weeks will pull this pit much deeper because of the high-grade material that we found and wasn't incorporated in these pit designs, because this drilling has been done since 2013, which is when this pit was designed. But in any case, the metallurgical recoveries will be a combination of how much material we mine and process. Excuse me, that'll all be part of the trade-off studies. This is quite nice from an underground mining perspective, the high-grade areas. Whereas if you want to get lower grade material, you need economies of scale and you need to move much more material. And that's where the open pit comes in. So we'll do those trade-off studies in the second quarter. So to sum up the metallurgy, the low grade material is partially refractory, so 50% recoveries, excuse me. And the higher grade material is about 85 to 90% recovery from that coarser grained high grade material.
And so Terry has another question. His question was, how are you going to deal with the base metal? Are there area mills?
Well, obviously there's probably a couple of ways I can answer that. The first one is during the flotation work, we did make a copper concentrate, and we can indeed float a marketable copper concentrate, and we get about 10% of the gold reporting to that copper concentrate. The second phase of metallurgy we're doing now is looking at whether the mass pull when we make that copper concentrate is very low, which means there's not a lot of material that reports to it. So the question is, can we leave the copper in and just say we're not going to recover it because this is primarily a gold mine? And then what effect will it have on the cyanidation circuits? Because copper will generally consume and reduce the recoveries of gold. So the idea is to pull the copper out, make a copper con, ship the copper con individually, and then leach whatever is remaining, which is mostly a pyrite concentrate, leach that and recover gold from that. So we may make, similar to Fruto del Norte, we may make a number of different products. We'll probably have gold directly from gravity, which we can put through a high concentration recovery circuit. We'll have a copper concentrate, and then we'll likely have the pyrite concentrate, which we'll leach on site and dispose of on site. So that's the most likely path for the metallurgy. But there are other mills in the area. I mean, obviously Pueblo Viejo has gold, copper, zinc, silver recovery circuits. And those, and they've got full autoclaves run by Barrick. That's $6 billion worth of infrastructure that's installed in the country with about a 10-year mine life left on it. It's actually got 2 years of pit mining and about 6 or 7 years of reprocessing low-grade tailings. We think that it's quite possible that Barrick may have an interest in the Candeleones mineralization if we can get it up to a large enough size that would then be able to add life to the Pueblo Viejo mill mine complex. Because once again, that's a huge amount of installed infrastructure that's going to run out of feed in a fairly short period of time. But at this point in time, we have no idea what Barrick's intentions are. We just continue to increase the size of the deposit we have and continue to try to move it up the value chain.
Oh, that's very interesting. So a couple of questions. Who are your main shareholders?
Well, the largest shareholder that we have is Eric Sprott, who is just under 20% on a partially diluted basis. After that, there's a number of smaller shareholders, all under 5%. So there aren't any really large shareholders that we have out there besides Mr. Sprott. The officers and directors combined own 5% and probably closer to about 7% on a fully diluted basis.
Okay, and can you touch on how much cash on hand you have and how far it'll take you?
Of course. I love this question because I do listen into quite a few of these presentations from other companies just to keep informed about what they're doing, and I get a kick out of a junior exploration company saying that they're fully funded. which is never the case. It's almost impossible for an exploration company to be fully funded. So our current cash position as of, let's say, the beginning of this week was about $2.5 million, just slightly over $2.5 million Canadian. We're currently burning at about $500,000 or $600,000 Canadian a month. So I expect our current cash position will take us through to sometime in the summer with the drilling. As I said, we own our own drills, and we're operating our own drills in the Dominican Republic. Our all-in cost is approximately $100 to $125 Canadian per meter, which I think might be the lowest cost in the industry. And the reason for that is because we use exclusively Dominican labor to man our drills, and we keep a pretty tight lid on the cost locally in the Dominican Republic. So we can make a buck go a pretty fair distance, with what we're doing. So I think we're sort of fine till the end of June. But I think the transformative information that should be coming into the market in the next few weeks will be the resource estimate, which I would highlight again does not include any of the high-grade drilling that we've done since 2015. The sulfide resource estimate was pinned in 2013. So I think you'll see a substantial increase to that resource, which will be out in the next couple of weeks. And then, of course, the PFS on the oxide portion of the deposit. I'm hoping that we can show an NPV on the oxide portion of the deposit that's in excess of our current market cap, which would mean that for an investor who purchases Unigold in the market today, you would effectively get the oxide project, but the sulfide project and the exploration would come for free. It's just the oxide project that really underpins the share price.
So you touched a little bit on that. Is there skilled labor in the area? It's relatively easy to find.
I wouldn't say that there's skilled labor. I mean, we've trained quite a few people to become skilled laborers, and we can certainly train people. But for the type of skilled labor we would need to operate a mine, no, that's we'll have to train people from the local area, and they're more than happy to take the training on. The safety training and the environmental training that we've given people over the last 10 or 15 years. We've had no lost time injuries. People are willing to work and willing to work hard. They just want to be given the opportunity.
So, Joe, you said 10 or 15 years. How long have you been working on this project?
Well, Unigold started in 2002 in the Dominican Republic. I got involved with the company in 2010, but they started in 2002. And prior to that, if there's any people as old as I am, the company's name used to be Carib Gold. They were operating in Cuba prior to that. And then when things in Cuba, a lot of companies left Cuba towards the end of the 90s when Bre-X hit. And so Unigold rebranded and moved next door to the Dominican Republic with the knowledge that they'd gained in Cuba. It's the same rocks, same style of mineralization. Moved across to the Dominican Republic, skipped Haiti, and went directly to the Dominican Republic and started doing exploration there.
So then you must have quite a bit of historical data on the properties?
Quite a bit. One of the things that you'll see in the presentation from our website is a fair number of slides on the regional exploration and what we're looking at in the regional exploration. We've drill tested quite a few targets, and then we got concentrated on Candelones in 2010. So we never really went back to any of the other targets, but we've got full airborne geophysical data sets. We've got ground geophysics on most of the targets. We've got the entire property has been blanketed by soil geochemistry surveys. There's over 50,000 samples that have been taken there. So there's quite a good regional database. It's our intention, once we show that Candelones can become an economic deposit, is to start moving out towards the end of this year and starting to assess those regional exploration targets as well. There's no question that the concession area itself is pregnant with certainly with gold showings. The idea is being able to move them into economic deposits, which requires drilling, and more drilling.
So I believe you have Analysts coverage. Can you maybe mention who that is and what the target is?
We've got, Mike Curran from Beacon just picked up coverage of us about 3 weeks ago. I think his target's 90 cents on the stock at this point.
Okay. And well, I mean, you touched a little bit on this, but there was a question. Do you have any idea when you'll start production?
Well, Right now we are pushing our engineering as quickly as possible, and we would like to think that we'll be in a position to finalize permits by the end of this year. In order to do that, we need to complete a bankable feasibility level of engineering, and we need to complete the environmental impact assessment that's done in conjunction with the engineering for the mine. We are currently on track to have that done by the end of this year. That'll have to be submitted to the government. And then the real answer to that question is how fast can the government move on giving us the permits for that? Certainly the conversations we've had with the new administration is that they're much more supportive of mining. They've said directly to the population that they won't be swayed by arguments. They'll use science, which means they want to review the environmental impact assessments. They want to understand closure. They want to understand water quality on the way through and engineering, and then they'll make a decision on that. We've been fairly open with the government. We continue to be open with them, and supply them with as much information as they need on the way through, so that the idea would be that when we submit the final documentation, they're already well up the path and educated on what we're doing, so that they're able to quickly give us approvals. If they give us approvals by the end of this year, it's probably a 6 or 8 month construction period. So we could be in production by early 2023.
Well, that's relatively fast.
Yeah.
There's a question here from David. What is the grams, I guess he means grams a ton recovery rate versus cost of recovery? How many grams of gold or tons of copper is expected to be recovered?
Okay, there's a lot there to unpack.
There is.
Maybe I'll start with the oxide portion of the deposit. The oxide, the average grade in the oxide is about 0.9 of a gram, but the oxides themselves run anywhere from 0.5 gram to 3 grams up to 4 grams in areas. The recoveries on those are about well, from what we can see out of the column test that we run now, it's about 80 to 85% recovery from those columns very quickly. So I would expect that those will be the kind of recovery rates that we'll be getting out of the heap leach portion, which is the oxide portion of the deposit. So that'll be the first sort of 4 years of production. As far as the sulfides are concerned, once again, we haven't done the operating cost estimates on the sulfides, but we can get 85% recovery from the higher grade coarse grained material, and we can get about 50% recovery from the low grade material, and the low grade material, when I say low grade, I mean it runs between 1 and 3 grams, which is not terribly low grade by a lot of standards. We call it low grade. It averages about 1.6, 1.7 grams on average, but that material is very well disseminated. It exists for about 110 to 150 meters in thickness. Very consistent mineralization throughout it. Everything runs sort of 0.5 gram to 3 grams in those areas. But that recovery, as I said, it's partially refractory, and we can get about 50% recovery through standard leach from that. The higher grade material, which runs over 3 grams, it's much younger mineralization, it's coarser grained, and we can get 85 to 90% recovery from that material through a gravity float leach process.
Okay, thank you. Paul, did you have a question or two for Joe?
Couple of questions. Yeah, just quickly. COVID, a typical COVID question. Who do you have on site that's running your properties now because of travel restrictions, going both ways?
Yeah, that's a great question, Paul, because this is something every company has wrestled with over the course of this year. So initially what we did when COVID hit a year ago is we shut down the project, obviously. We shipped all of our expats back to Canada. And fortunately, we didn't actually have to ship them back to Canada because they were all here for the PDAC at that time anyway. So they just didn't return. What we did at that point is we shut down the drilling and we shut down what we were doing until we understood how COVID was going to impact and continued to support our employees and our key employees. We kept on the payroll, kept them through. We started drilling again in August. So we had approximately a 4-month shutdown. And we started drilling again in August. And at that point, there were still travel restrictions in place. We did everything remotely. We installed, high definition cameras. We photographed all the core. We allowed the geologists here in Canada, the photographs would be uploaded daily from the drilling. They would review it. They would mark out sampling. Our sample techs in country who were from the local area were perfectly capable of marking up core. Our drilling technicians that we have there, as well as our drill foremen, they've been spotting drill holes for 10 years for us. they're quite capable of spotting drill holes and locating them in the field, getting them in the right spot, doing the surveys on them, downhole surveys and surveys afterwards. So our Dominican staff picked up the slack for us. We ran that way till pretty well the middle of December. And in the middle of December, while there were travel restrictions were lifted, we now have a number of expats in the camp and geologists in the camp that are now picking up core and looking at it and mapping a little bit better than we were. So we had, we adapted, I think is the way to describe it. We've had no known COVID cases at our camp, and there are, as far as I know, very, very few COVID cases in the area. But as I said, it's not a metropolitan area, it's not an urban area, and there's not a lot of people moving around. So we've been supporting the community with masks and with what we can in order to try to keep COVID down in the area as well.
I think, okay. Just one more, a couple of things actually. Just a shout out to Terry. Thanks for coming on today, Terry. Much appreciated. I'll talk to you later. Haven't spoken to you in a while. Now, do you own the properties outright, or what's the deal with the government? And are there any royalties on the properties from the past?
There are no, well, there's a government royalty of 5%, but that's more, it's treated as a minimum tax, so that you pay the royalty based on revenue, but then that gets deducted from what you owe on income tax.
Okay.
If you follow me. So if your income tax is 0, well, then you're still paying the royalty. So it becomes a minimum tax. So the royalty's there, but it's tax refundable, as it were. We do have Osisko has an option to pick up a 2% royalty on any project that we bring to feasibility, and within us delivering a feasibility to them, they have a 90-day period to exercise the option. They can pick up a 2% royalty for $2 million. Within 90 days after commercial production is established, we can buy back 1% of that royalty for $1 million.
Gotcha.
So in effect, Osisko has a 1% royalty for $1 million on whatever we have. And that was, in 2015, when money was hard to come by, I'll give a shout out to Sean Rusin and to Osisko. They supported us by taking an equity interest in us in 2015 when we needed money to start drilling some of these high grade areas that were unknown at the time. They took on, I think, a fairly big risk. But in conjunction with doing the equity participation, we also negotiated that royalty, and I'm quite happy to give them that royalty, considering that the company was on fumes at the time, and without their help, I don't think we'd be where we were today. So, quite thankful for that opportunity.
Excellent. I have one last question. The Dominican Republic is famous for its precious stones and gems. Are there any of those precious stones or gems on your property?
No.
I can't think of the name right now, but
just not the right rock types. Most of those are in the south, well down the coast from Santo Domingo on the south shore. Very specific rock type, very specific intrusive that's being mined and polished there. So nothing where we are.
Okay, you won't have a jewelry store on the side. That's what it is.
Not that I know of. No.
I got you, Joe. Thanks very much.
Unless Paul, unless it's gold.
I got you. Yeah. We can open that one, that's for sure. Joe, thanks very much for today. A very interesting story. We will keep all our audience posted over the next few months with every press release that come out. Great presentation, and I appreciate it very much. Thank you. Thanks, everybody.
Paul. Thanks, Sophie.
Any further questions, direct them to Sophie, myself. We can pass them on to Joe. Everybody, enjoy the nice weather. Golf is coming soon, as you can see in my background.
Thank you.
Take care.